Today, the market pulled back with an inside day as the market consolidates, getting ready for CPI data next week. First up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today's SPY was down 1.09% as we continue to find resistance right here at SPY 414, which is the 50% retracement of the bear market. So at this point, it looks like the market is trying to consolidate some of this recent rally before we get the CPI data next week, which means we could continue to go into this trading range until we can eventually get a breakout. And remember, with breakouts, you are looking for price action to confirm the direction. You are not going to guess the direction. So at this point in time, we know we have the bull trend while SPY is above 408, which increases the probability that we get the bull breakout, but obviously nothing is guaranteed. We need the price action to prove it. So I will not be surprised if we just go sideways or slightly drift lower to test that support continuously to prove there's still buyers at that level, which will strengthen the bulls if we continue to hold this neckline breakout. So SPY is still as simple as staying bullish as long as it's above the breakout zone at 408. And then if we lose the breakout, we have the support trend line down here, which is going to be right around SPY 402 to 404. As long as we hold all of this critical support, we still have the bull trend. And the bulls will be getting a lot weaker if we start seeing SPY breaking below 402 and 400. Now do keep in mind we have the golden cross. All of the moving averages are crossed over and they're all favoring the buyers with the positive slopes and the bull trend. So this is still a very powerful bull trend as long as the price action is above all of this critical support. So yes, it is possible we go in this trading range until we get another breakout back over 414. And then once we get that breakout, we should have a smooth ride higher to fill the gap at 421. And then from there, we can start climbing towards 430. So if you want to be extremely cautious, you can simply wait for the breakout of the resistance, or you can start taking on risk as we approach support, because every time we approach support in a bull trend, your risk is very well defined, which means you don't have to take on a lot of risk for the potential of making quite a bit of reward. Anytime your risk reward ratio favors buying the dip, then you want to step in and take on risk. And then make sure you just manage your risks so that if we lose support, you're not taking on too much risk if we start going lower. Don't be afraid to buy the dip in a bull trend. That's exactly what you should be doing. You should be taking on risk at support and locking in your profits at resistance. On the Nasdaq 100 triple Qs, we were down 1.78% today, and it's a very similar story as SPY. We are consolidating, and if you look at the FOMC bear price target down here right around 301, price action is still well above that level, which means the triple Q still has quite a few bears that are still trapped in their short position. Likely some bears are exiting for a loss because they don't want to take on too much risk. But a lot of bears that are holding onto that position are waiting for confirmation they need to cover, which is going to be this breakout above the resistance right around 311 to 313. If we break that resistance, we should easily short squeeze the bears out and go up there and fill the gap at 322. And then above that, we have our price target at 327. Remember, if I zoom out, this is a giant double bottom breakout from the neckline, which is at 294, and the double bottom is off of 260. So it does look like a very bullish technical pattern that does send us to higher prices into March. So yes, you should be taking on risk as we approach support because that is where your risk is well defined. And if you're managing risk well, you want to try to get in near your risk level so you have very well defined risk. If we lose this support right around 300, we could revisit the neckline at 294. And as long as we hold above that neckline with this bull trend, we are very likely going to continue climbing higher. On the Dow Jones, we were down 0.61% today as the Dow Jones is still within this flag. Even though it did try to break out yesterday, we are right back within the flag. And yes, this is a bull flag, which means we are looking for a bull breakout above resistance to send us into the 350s. However, it is still possible we revisit the bottom of this flag one more time before we get that breakout, so there is going to be strong support down here right around 333. The bull breakout will be above 341 to 343, and then the resistance at 346. On the Russell 2000 IWM ETF, we were down 1.46% today, and if you look at the support trend line, we closed right on top of support today, so going into tomorrow, there is a very good chance of a bounce. Bulls are going to take on risk at this support because it is a bull trend of higher lows and higher highs, which means we could see the small caps finally starting to push towards 201 and 203, and we're only looking for the confirmation of the bounce off support and the break above about 195. So pay attention to the price action in the small caps because they could be leading the way off the bounce, which is going to be right off this support trend line. If we lose this support at 192, we could come all the way back down to the breakout of the neckline at 188. On the ARKK ETF, we were down 2.89% as ARKK is getting that rejection from the overextended condition at resistance at 44.6, and we're right back down towards the support level at 41.7. If we don't bounce from here, we have one more critical support at 40.4, and if we break all of that support, then this bull trend is weakening, and we're likely going to correct the bull trend, which could take us down to 38 and 34.6. A bounce from support could send us back up towards 44.5 and then 45.7. On the VIX, we were up 5.31% today as the VIX did test that resistance at 20 yet again, and yet again we saw the VIX getting crushed from 20. The VIX continues to close below the resistance trend line of lower highs, so I continue to tell you this low VIX environment is going to favor the bull trend. If the VIX starts spiking above 20, we can instantly get more cautious, but right now we're just not seeing that, and we're seeing a low fear bull trending environment. On Bitcoin, we're still trading right around 23,000, and we're right on top of all of these moving averages, and you can tell the Bollinger Bands are getting very squeezed, so this is looking a lot like Bitcoin back here around 16,000. We're taking time off the clock and we're consolidating in a bull flag, which is a very bullish pattern. So from here, you should be following price action, which means you're getting more bullish on a breakout above 24,000. If we break 22,000, then you're getting more bearish for a retest of 21,000 and possibly the 200 daily moving average at 20,000. But again, let the price action do all the talking, and right now this is still a consolidation in a bull flag. On Amazon stock, we were down 2.02%, and Amazon came back down to the support trend line and the rising 20 daily moving average, so this is going to be a great opportunity if you're bullish in Amazon to start adding on risk. We have some critical support right around 100 down to about 98, and if we lose that critical support, we could come back down to 93.5 and possibly close the gap at 90. However, if we hold this support and start to bounce and we break back over 102, we should easily start running higher towards 115 and then 121. So this does look like a bull trend or at least a retest of the 200 daily moving average if we bounce from this support level. Also pay attention that we did dip on extremely low volume, so I will not be surprised if we start to see some high volume buying from here. On Microsoft stock, we were down 0.31%, and intraday we were outside the upper Bollinger Band, just getting way too far overextended as we hit our price target right there at 275. So anytime you get these overextended conditions, you need to lock in your profits because you're almost guaranteed to be able to buy back at lower prices. Way outside the upper Bollinger Band and way far extended from all of our moving averages is almost always going to invite short sellers, and the bulls are going to lock in their profits. So from here, you're looking for support on Microsoft at 267 and this gap fill down here right around 258. And you can stay bullish as long as we're above this breakout zone, which is right here at 255, and this critical support at 252. On Nvidia stock, we were up 0.14% today, and Nvidia hit our next price target up here at 227 and is getting very close to closing the gap just above 230. Stay bullish above the breakout at 213, which is also our support trend line, because from there we still have a very strong bull trend that could send us over 230 and into the 250s. However, don't look too far ahead. We still need to fill that gap and prove that we can blast through it. And if we lose support at 213, get a little more defensive because we could be coming back down towards 192. On Tesla stock, we were up 2.28% today, and we got the bull breakout just above the resistance yesterday. And today you saw follow through with more shorts getting squeezed as we approach our next price targets at 205 and then 207. Remember, I told you I expect these all to be strong resistance levels, but there's just so many short sellers in this stock. They're just continuing to get squeezed, which is making the dips very shallow, and the bulls are taking advantage of the easy ride higher. Again, look for strong resistance at 207, and I still think we're heading towards 230, but in the short term, I won't be surprised if we need to get a little bit of a pullback before we can hit that price target at 230. Look for downside support levels at 196, 183, and 173. On Apple stock, we were down 1.77% today, and Apple is still closing above all of our moving averages, including the rising 5 EMA. And as you can tell, we did get an inside day, so if we do get follow through with tomorrow's price action, we may start pushing through that resistance at 156 and start marching higher into the 160s. Stay bullish as long as we're above support at 150, and if we break 150, you're looking for this gap fill just below 147. On the financials, we were down 0.59%, but overall we have price action above all of the moving averages and a strong bull trend, so the financials are still looking very healthy. The industrials were down 0.56% today, back down below the 5 EMA, but still holding on to this bull trend. The healthcare sector was down 0.29%, still marching lower in this channel and very likely trending down towards support at 130. The energy sector was down 0.89% today, breaking back down below this resistance at 88, and a rejection from here should send us lower down towards support at 82.6. So jumping back over to the S&P 500, this week is likely going to have some more consolidation before we head into next week's CPI data report. So just trade the range, which means you're buying at support and selling at resistance, and you're only getting more bearish if we lose critical support and start losing this bull trend. Remember, in a bull trend, you're going to have a much simpler time trying to look for long entries off support and not trying to focus on shorting the bull rally. If we lose the bull rally, then you can start focusing on shorting. But right now, you're going to have a much smoother ride following the trend because the trend is your friend and the trend is still telling us we're going to higher prices. Also, don't forget I have my own trade alert service called Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank or learn how to subscribe by clicking on the link in the description of this video. If you want access to all of my intraday updates and analysis and my members only videos, you can get that at the Stocks Channel Trading Discord community. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.